Okay, partnerships topic is that kind of topic you would have been studying this thing like since your basics, and with the financial reporting perspective, that what's the difference between a sole trader and a partnership, how many partners are there, the UK laws, this and that. That is something related to the financial reporting perspective. In taxation, we have to see that if there are 2 or 20 partners and they are doing a business, how HMRC will collect tax with them. And if they are earning any profits, any income through their partnership business, that is counted as non-savings income. So here, our major objective is only one: to explain the allocation of partnership trading profits or losses. If partners are having losses, how it will be allocated, distributed among them. And if it is profit, so how that will be distributed among them. You know that in partnership deed, a partnership ratio is decided when partnership gets registered. So that ratio is actually going to help in allocation. So I don't need to introduce what a partnership business is, because you all must be familiar with this. How allocation is done? If let's suppose that in mid of the year, partners decided to change their profit sharing ratio, and they can do it. It's based upon their investments, their equity. So then we will have to reallocate. Capital allowances are there. If the partners are taking, we will be calculating these as well. Then the events are, if a partner has been admitted, like a new partner has just joined the business, so what will we do? And if any existing partner has left the business, like the partner got retired, then what will we do? So these are all the 3 events that comes into your exam, and apart from these 3 events, nothing else comes for examination. If partners like have faced a loss, then what will they do? So HMRC gives them a trading loss relief, because tax is always paid out of profits. If there are no profits, there is no tax. And then LLP's concept is their limited liability, which means that if, let's suppose, the business got bankrupt, and partnerships has signed LLP. So partners and the business will be a separate legal entity. In the case of bankruptcy, or in the case of debt recoveries, nobody will come and take the personal assets of partners. Business will be liquidated. They will have to sell their business assets, but it's only limited to their business, and the partner's identity is separate, just like it happens in case of a company. But if the partners doesn't have limited liability, then their personal assets and everything can come at stake. Okay. Okay. Is this clear to you? So just put a message in the chat and I'll move on. So coming towards how profits and losses will be allocated between the partners, how it will be distributed. Just remember one thing: in taxation, we have our taxing. HMRC will collect tax according to start and end of the fiscal year. It's not at all concerned with what is your accounting year, what's your financial calendar year. They have nothing to do with it. So if the business is maintaining accounts 30th June, 31st December, you will first need to calculate the basis period. Okay, I'll tell you how you have to do this. So let's start from here. Partnership profits and losses determined for the period of account of the firm as a whole are first adjusted for tax purposes. So this is what we called as tax adjusted trading profits. The adjusted profits and losses are then allocated between the partners according to the profit sharing ratios. Okay, now let's see this question. And you know that what partners get, they get the salaries, they get the interest as well. So, all such stuff we will be also putting in our performance. Now see this example. Jekyll and Hyde started a professional practice on 1st January 2025. Is this date in our fiscal year? No, this date doesn't come in our fiscal year. Now they are preparing their accounts to 31st December. So year will end started from 1st Jan, and this is their financial year. Okay, this is not obviously the tax year. Now profit sharing arrangements are salaries. Jekyll takes 30,000, Hyde takes 40. And this is like the profits 2,150,000, and they are getting 10% interest on capital. Then profit sharing ratio 60/40. Okay. Adjusted trading profits were 140,000. So allocated shares of the year ended 31st December are as follows. Now my first question is, can anyone tell me how this 140,000 came up? And while I'm just opening my Excel here as well, and you people also do this, because if this can come in a CRQ, so you will have to perform on spreadsheet. Okay. And it's good to practice on a spreadsheet so you remember like what to do and how, and if it comes in an MCQ, then you know you will be able to like do it very faster. So the thing is that how much were the profits? And okay, they have already given you the adjusted trading profits. Okay, if it would have been like, I'm just giving you an example, if it would have been like that question would have given you financial profit, then you will have to month apportion it according to the tax months. You will not take from Jan to December, then you will take from April to December. Okay, your tax year only. Okay, fine. So now year ended 31st December 2025. They have given you the profit that is 140,000. Now I'm just also writing it down over here in my way that 140,000 is the total and this is supposed to be allocated. Now they are getting salaries 30 and 40. So this is what is for Jekyll, this is for Hyde, and they are taking their salaries, which is 30,000 and 40,000. Then next, interest on capital. Interest on capital is 2 lakhs 10%. And it is 150,000 10%. I'll simply copy this and put it over. Okay. Now next what I will have, that's all. Nothing else I'm having, no additions, no subtractions. So now what I will do, this is like my remaining of the income. So I'll take it simply like solve. Yes. Okay. Now what I need to do is I need to balance it. Like this is the 105. This is like basically the 105,000 remaining over here. And what will be the remaining of my share? You know, just what I did right now, you can do this thing as well. See, it will give you the same answer, 35, or you can add this and then directly subtract. Examiner has no issues with it. Okay. Now you are going to put on the share, and here we need the profit sharing ratio that is 60 and 40. Right. So basically what will we do? The total is 35,000 and you need to put it across like 60/40. So very simple, 35,000 multiply by 60 here and 35,000 multiply by 40. Right. Then you know you can just add it all up to check whether you have done this correctly or not. So 140,000 is completely allocated. And what the partner will have, if you will ask what Jekyll would have, Jekyll is going to have what? That is like the salary Jekyll is having, interest it has having, and now the profit as well. Okay, this also becomes 140. So we have done it correctly. Any problem here? Right. Nikhil, are you saying, sorry, Jackal. Carol, are you saying something?
No, ma'am. Oh,
Is this clear? I'm moving forward. Okay, now there comes an event if there is a change in the profit sharing ratio. Now, for example, there are two partners, okay, and they were sharing the ratio in 60/40, but now they have decided that, you know, They are going to do it 50-50. So what is going to be the change in the solutions or how we are going to check that? So let's talk about it. So first of all, just tell
Hello,
me.
Sahar. Assalamu alaikum. Can you hear me?
Pakistan, ji.
Sorry to interrupt you, Sahar.
All right. So I was discussing regarding if there comes a change in the profit sharing ratio, okay, in the partnership agreement, and the question notifies you that there is a change in the PSR. So now what will happen in our calculation? So let's see this example. So Janin and Hunter have been in partnership since 2013 and prepare accounts annually to 31st March. Janet and Hunter both receive an annual salary of 50,000. Partners have always shared the remaining profits 50-50, like half. However, Janet will be taking on more responsibility and it was decided to change the PSR to 70-30 with effect from 1st July. Now tell me one thing, what is the year at first? They are preparing their account to 31st March. So when would have the year started? Year would have started on 1st of the April. Okay, 1st April to 31st April 2025 till 31st March 2026 or whatever we will see. Like, yeah, 31st March 2026, it means that the year would have started on 1st April 2025. Okay, is this understanding correct here? Okay, now what is happening that right after May, June, after 2 months, they have decided to change the ratio. So we will also do the question in two parts. We will do it according to the dates. So adjusted trading profits are 180,000. Now let's see what the question has done. They have done this into two parts. We will month apportion everything. So 1st April to 30th June, what was the PSR? It was 50-50. So we will do the question according to 50-50. And then from 1st July till the year ended, we will do it according to 70-30. Okay. So what I'm going to do, I'm just simply going to go back into my Excel and I'll do it over here. Okay. Let's suppose it's the same Janin and the Hunter, so J and H. Yeah. Okay. What are the profits? The profits are 180,000. Salaries, they are taking like how much salaries is being taken? Both receive an annual salary of 50,000. Okay, now here comes a twist. Let me put this down here and I'll put on the date. Now from where am I taking right now? I'm taking from 1st April 2025 till when it changed 1st July. It means till 30th June. Okay, how many months? April, May, June. This becomes 3 months. So what will we do? We are going to apportion this. What is it saying? How much salary is there? The salary is 50,000. So we will do it 50,000. Divide by 12, multiply by 3. So 12,500 is the total. Uh, Let me do this here. 50,000. They are getting annually there, divided by 12, multiplied by 3. Okay. Same here. And we will add this here. Any issues in the salaries calculation part? We are taking 3 months. Okay. Out of 12. Then next, what have they done? That's all. No interest on capital, nothing as such like that. So what will we do? We will take the profit share. Okay. So I'm just removing this line from here. Okay. So what will be the profit share? The profit share is going to be, let's find out the profit share at first. 180 minus 25,000. 155,000 is supposed to be done like how much? But this is the 155,000 that is coming for how many months is this coming up? let me make it more easier. Let's do it like this. 180 is to 12 multiplied by 3. Okay, so this goes like fine. Fine enough. So 45,000 is the tax adjusted trading profits for 3 years. Both of the partners were getting 50,000 of the income. So 50,000 has also been divided into 3. Like simple as that, 51 lakh is divided into like the 3 months. So 25,000. Now this is the 20,000 that is remaining, which will be apportioned 50-50. So I'm just simply doing it like this, 0.5 and 0.5. 20,000 is 20. This is the partner's income for 3 months. Is this clear? Now remaining, I'll do for the 9 months. What is the date? 1st July 2025. It will go on to 31st March 2026. How many months that becomes? 9 months. July, August, September, October, November, December, January, March. Okay. Here I'll only change. I'll just tag it over here. 9 months. This becomes simple. Now, where's the change? Salary remains the same. So here, I'll just simply tag 9. Okay. Similar approach here. So this becomes like that. Now what is remaining? 60,000. And now the ratio has changed. Ratio has changed from 70 to 30. Done. You can add the total income as well. How much they have got for the full year. See, done it. Any problem here? So let me know. I'm giving you like 2 minutes. You can copy this if you want, but you should do it yourself. So I'm explaining you once more what I have done. Total profits were, if I just, put the total profits here as well, 45 plus 135. Total profits were 180,000. This 180,000 was for the full year, but in the full year, profit sharing ratio changed. So we have also done the question in 2 parts. The profit sharing ratio changed in 1st July. So when we start from the financial year, 3 months had already passed and profits were supposed to be shared in 50-50 ratio. So partners are getting salaries. We have simply apportioned it into 3 months and got our answer. Okay. Then other part when the ratio changed, so we have done it like according to 9 months apportionment, and this is how the ratio has been allocated and total profits have been distributed between the partners. Right. Now there comes capital allowances thing. In self-employment income, you will study this thing in greater detail. If I would want, I can skip this as well right now too, because, we can go and study that for individuals as well. But over here, I'll just give you a little bit of a brief concept. So, when you will study it over there, you will have a background. So capital allowances is simply like when a partner has done any capital investment, a very heavy investment, and they tell to HMRC that, give us some tax relief or something like that, because allowances always act as a tax reducer. HMRC is giving you a relief over here. And why it is giving you relief? Because you have invested in heavy capital or something like that. That's your cost. So directly coming towards the questions, I'll just tell you some rules. There are many rules associated to this topic, but just let me start. 3 partners are there and the ratio is 40-30-30. For the year ended, partnership adjusted trading profits before capital allowances. So they are 150,000. Now, tax written down value at 1st April 2025, when the fiscal year It has not started, but this is just a date. So there are different kind of pools. Pools means that there are different kind of columns. Just like we have non-savings income, savings, dividend. Why do we have different columns? Because the rates are different. The slabs are different for every of the thing to do. So similarly, over here as well, we will see that assets are going to be placed in which pool. So according to that, we will figure out the percentages. And these percentages are given to you in your tax tables. So main pool balance. This is a balance like TWDV, which have been given as 10,000. So he has put 10,000 over here. Car used by one partner, 50% business use. Now this car is used 50% in business and another 50 as a personal one. So what happens, like you will only get capital allowance on your 50%. That's it, on your business use. HMRC will not give you relief on your personal use. And carbon dioxide emission 60 grams per kilometer. So this is like, very much important, because when a car emits more than 54 grams, this categorizes into special weight pool. You will not categorize this into main pool. So when you will, study the carbon dioxide emissions of the cars and where you should classify that. So from there, you're just going to pick it up that, okay, this car is going to be taxed at what rate? If assets are in main pool, they are taxed on 18%. Okay, you will get allowance on 18%. And if it goes in a special rate pool, the allowance is reduced to 6%. So when we are going to put in main pool, when we will put into a special rate, there are rules. But right now, I'm not talking about those. Okay. So I have told you main pool will come 10,000 over here. Car is more than 50 grams per kilometer. So it will come in a special rate. And we will only take the business use. That's all. So 18,000, right? And we will do 6%. Okay. And take 50% of it. Over here, we have taken 18% of 10,000, which becomes 1,800. So we will subtract this because it's an allowance and this is going to reduce your TWDV. So simple calculation is there. This is like your total allowance. So we will continue with our calculation. What is the profit? Profit is 150,000. We will subtract the allowance and this is our tax adjusted trading profit. And according to the ratio, we will simply apportion, because there is nothing else in the question. So if you people want, you can do this calculation yourself and just check what is going to be your answer. So want to try? In your Excel, you can do it. I can give you like 5 to 6 minutes on it. So just try this question, then you will see who has done it correctly. So let's check your understanding. Okay, this is not a very difficult question. Like TWDV is given, main pool, this is given to you. Car C, this is 50 grams per kilometer. So, this is not going to go into the special rate pool. So you will only take the business use and then just try it out. Okay. And one more thing which I can tell you, that there is a concept of AIA, annual investment allowance, which is like of 10 million. And this 25,000 will also be a part of the allowance. Okay. So only remember this thing and just do this proper allocation. Let's check how you're gonna do this. Okay. I'm muting my mic. So Sheena, are you going to do this? Okay. Has anybody got any answer? I'm just showing it here so you can check your calculation, and if any mistake has been occurred, you can rectify. So adjusted profit before capital allowances, it is given in the question. 228,500. We will just put it over here. You need capital allowances. So we will find out the capital allowances. So let's go to the working. WDV, that has been given 65 cars, because I told you they are all going to be classified into the main pool because of the carbon dioxide emission. So 50-50 will come up over there. We don't give any AIA to the cars. That's why no allowances here. I told you that AIA it's a 10 million amount that is like given. So you just needed to classify 25,000 fully over here. Then 18% to all, but you need to make the business apportionment. So that has been done, and there you go with your capital allowances payment. Then remaining is like very simple. So any problem here, you can ask me. Otherwise, I'm moving forward. Okay, the next event after changing PSR is if there comes a new partner. Again, we will divide the question into two parts and do it like this according to the dates. So Ahmed and Oliver have been in partnership since 2018. Profits are 50-50. Zen joined on 1st January and the profits got split in 40-40 and 20 from that date. So previously, let's check that when the year ended 30th June. So when the year started, 1st July. So 1st July till 31st December 2024, we will do it in that part, like 6 months from there and 6 months then here. And according to the PSR, you will do it. So I don't think so I need to spend much time on it, or you as well, because you know what to do. So same Excel, you can copy paste and change the figures. So and by the way, one more thing here, like how the tax will be assessed, because this we are doing it according to the financial year. So here what will we do is, does your fiscal year start? It start from 6th April. When new partner came in 1st July. So it means till 3 months you will be assessed on, here are your profits, okay? Like how you will be taxed over. So 40,500 and you will do it 3 tax months. So this is it like this. Then remaining 9 months. Okay. So total, then you will have it like that. And transition profits. Can anyone give me any example? What is the transition profits? Transition profits, we call it to overlap profits. If there are some months, okay, that is like, clashing with each other. So we call it transition profits. So I think they have given it to you in this question. Transition profits. Yes, it's mentioned over here. So they are just giving you another scenario attached with it, that if in this case of a clashing in profits or transition in profits are there, so according to the ratio, you have to apportion. Okay. And what about Zen? He joined it on 1st January, so his profits will be assessed from the start of the trading, because he was not he was not a, like, he joined it before the fiscal year started. So we will just take 3 months over here out of 6, and then 3 months over here out of that. So this is called basis period calculation, and we only do it for the tax purpose. Now retirement. If a partner has left, whatever is the impact, that also we will do into 2 parts. So I'm just reading it out. JC and J have been partnerships, sharing profits equally, preparing accounts to 31st December. It means accounts have started from 1st Jan. Okay. So he decided to retire on 30th June. So again, we will take like 6 months. Okay. 6 months and 6 months. Very simple. It is. Then it has given you some of the explanations according to the basis period. So, you can study this. It's for your reading and calculation perspective. So this is like what is happening in the partnership. And another concept is that if the entire business has ceased, so what will you do? In this case, let's check. Partnership business, there's a difference between a new partner coming up, one partner going, but over here it's a succession of partnership. So Delphina Perry have been in preparing accounts 31st December. Partners decided to retire on 31st March. Tax adjusted profits have been given to you. This is for your full year, and this is just for the 3 months because they did not complete another year. Transition profits, they have already given you. Trade ceases during the tax year. Since the trade has ceased, so transition profits, they will be added back. Okay, they are gonna get that back because they are the profits. So 6th April to 31st December, our fiscal year. So we will simply do it 1 lakh. It used to be divided into equal 50-50 percentage. So 9 months they have taken like this. Then 1st Jan to 31st March, they have taken it like this. And this is the remaining transition profits that has just been given to you over here. So any problem here, you can ask me. Otherwise, it's a very straightforward calculation. You can do this question yourself. Okay, that's like your homework. Okay, if there is a trading loss, so in this case, what you can do is, like, I don't find this area very much difficult. It's very simple. If you're having the loss, so you can do it current year. You can carry forward your losses to the next year accordingly. So Flight and Bank commenced trading on 1st April, sharing profits and losses 55 and 45. So 3 years profits, and here's the loss we can see. So allocate the tax adjusted loss to the partners for all years and indicate each partner's trading income. And the second is indicate the alternative reliefs available, like if they want to take it. So just check this out. See, 55 and 45 profit got allocated. Loss will also be allocated on the same TSR. And then again, they're having the profit. So what is going to be the assessment? It is like Flight is having 9240. Then this is the loss and this is the income. So simply sum it all. That's all. Net income. And alternatives are like, you can claim your relief from the HMRC. You can tell them that for this month, you were having the loss and how you are gonna set this off. So similar things are also mentioned over here. So it's a very basic level calculation. And the concept I already told you. So we are done with partnerships. You can try the quiz from here yourself and share the score with me. So when this is just like, not more than a 1 hour topic, by the way. And examiner doesn't examine this much. I'm telling you the truth, but it can, okay, till MCQs level. So you need to know this thing, like, admission, possession, retirement, basis period calculation, or capital allowances if that comes up in the grade. Do you want break or shall we start with NICs? Because this is also, I think, like maybe it will take me 30 minutes to complete. And by the way, these slabs are given to you in your tax rates and allowances, so you don't need to learn anything. Just concepts are important. I'm just okay. Let me start. I'm just going to give you a concept. In UK, what happens that insurance is mandatory, and your employer also pays. Employees also pays. For employer and employees, class 1 NIC is there, and class 1A is only for the employer. Then there is an employment allowance. This is for the employer, which reduces his liability. If a person doesn't do the job, he is a self-employed, so he will pay class 4. So the categorization has been done and there should be no confusion in this. Okay. Now let me come towards the calculation part. Very simple. Employees class 1 who will pay? Employees will pay. Employers class 1 who will pay? Employer. Class 1A paid by employers on the taxable benefits. Whose taxable benefits? It's this employee. Class 4 will be paid by the self-employed only. I'm directly coming here. See how it is done. This will be given to you in your tax table. No need to learn. Application is similar like you do the income tax labs questions. So Kana is an employee who earns an annual salary of 60,000. Now, how will you tax this 60,000? So 0 till 50,000. Okay. These are the slabs. If you look at your Finance Act or your tax syllabus or your kids starting pages, you will get this thing over here. So 0, and if I do it here, you can understand this as well. I'm giving you the slabs, by the way. 12,570, 0%. No need to pay any. Then the second band is from 12,570 till 50,000 something. Yeah, this is mentioned over here. So 0%, 12,570 has been like text. Then you will obviously take the additional one. It will be contributed on 8%, and if anything is more than 50,270, it will be contributed on 2%. This is like the simplest calculation ever. So class 1, employer NIC. One thing, let me tell you here, till 5,000 HMRC gives the exemption. Okay. So additional, whichever is exceeding from 5,000, employer will pay that, and on a fixed percentage of 15%. Previously, I told you for employee, and this one is for the employer. So I'm doing this question in front of you. Annual salary is 24,000, and it is asking you to find out for both. So if I just go into Excel and I'm doing, see here, employer NIC 1, for example, class 1 NIC. So this will be 24,000 minus 5,000, right? And what percentage that is being taken at? 15%. I hope this is clear. Now coming towards the employee class 1 NIC. So it is like 24,000. So till 12,570, this is exempt basically. So additional one, and we will take this on 8%. Right? Now let's check. I hope this is clear. This is also my answer. So I've done it better. So this is all about class 1 NIC. That's it. Now coming towards the annual employment allowance, like I told you. So each employer is entitled to claim an annual employment allowance, and for this year, this is 10,500. So if, like, in this question, the liability is less than 10,500, so he doesn't need to pay this. He will get the employment allowance. Okay. So you need to just remember it. And one more thing. It's not available for director if director is the only employee. Okay. This is not allowed. Class 1A will be given on the benefits. So employees having a salary of 77,000, it is asking you to find out class 1 and 1A both. So I'll do it. In addition, he was provided with the benefits, car and the fuel benefit. It has already given you. Question can ask you to calculate it as well, but right now this is given. The only other employee is Rose, who is a director. He will not get any employment allowance over. So see, 8% and 2%. I hope this is clear to you. Then paid by employer minus 5,000, 15%, and over here employment allowance will be given because this is the answer is more than 10,500. In class 1A will be given on the benefits and 15% straight away. If you are a self-employed person, you will be paying class 4 NIC, and class 4 bands will also be given to you, which is 6% and 2%. So whatever is mentioned in the question, just do it situation wise. There is this is only calculations part. You just need to categorize, okay, it's a self-employed person. So what, and by the way, question will tell you clearly what it means. So this is a table. See, self-employed NIC will pay class 4. This is the table. If you are employed, you will pay employee class 1 and employer will pay 2. Class 1A and class 1. And 10,500 thing, you need to remember it yourself. That's all. So we are done with the topic line. You can practice the quizzes, okay? And let me know if you're having any issues. So I'm done with the class.